Federation of Indian SME Associations, as well as jointly with SME Export Promotion Council, Maharashtra Industrial and Economic Development Association, and SME Finance Facilitation Center. On behalf of all this organization, I welcome the stalwart speakers from the different sector, particularly my very dearest friend and respectable, the businessman, advisor, mentor, Shailesh by Haribhakti, who is mentoring many boards, many top businessmen, top industries, banking, and especially for SME sector. Shailesh by, welcome at our webinar. I think you are attending our first program in last 30 years. So I welcome Sanjay Desai. Sanjay Desai is based in Singapore, and he is an expert in trade finance, supply chain finance, and I welcome Sanjay as a committee member of advisory board member of SME Chamber of India also. Nandkishore Desai is also one of the stalwart from the trade finance and supply chain finance management. I welcome Nandkishore ji at this very interesting and very important webinar where we are going to discuss on the supply chain finance. And of course, Shailesh Bhai, Sanjay Bhai and Shirish Bhai is also going to speak. But special welcome to Shirish Garg, particularly for this very important webinar where we are going to discuss about the supply chain finance. Before that, let me give a glimpse of what SME Chamber of India is doing, because after a long time we are also meeting virtually, Shailesh Bhai and me. So he should also aware that what is the SME Chamber's development going on and what is the activity we are doing. Friends, those are joined now from the SME sector, from the industry, from exports, finance, export business, or particularly from the imports. I welcome all of you at this very important webinar. And the SME Chamber of India is working for last 27 years, particularly for the supporting SMEs for business growth, export promotion, channelizing finance, investment, particularly supporting for the joint venture, technology transfer, contract manufacturing, and resolving their issues and problems related to the various segments like banking, finance, government agencies, government services, international cooperation. Also, we support for that. And since this pandemic, killed a lot of SMEs business, and we want to create awareness, create a confidence, and support SMEs to understand what are the facilities, what are the avenues, and what are the different type of support services are available for them. And this is one of the part that SME, those SMEs are struggling. They are looking for supply chain finance. So this is a very unique and exclusive webinar for particular subject we have organized today. So, friends, most of the the SMEs are not availing the different type of services from the supply chain finance. I know a lot of people going only for the working capital. They supply large corporate, they supply PSUs, they supply SME, they supply medium-sized industries, and they are supplying to cooperative and the corporate level different segment. So there is a ecosystem particularly for the supply chain. Where the SMEs are supplying to a lot of multinational companies, and a lot of multinational companies that work with the suppliers all over the world. The health of global supply chain isn't just measuring by the revenue or profit. A more relevant indicator is how efficiently capital flows between buyers and suppliers. Slow moving capital, much like slow moving inventory, creates unnecessary cost and insufficiencies in the supply chain. Friends, the supply chain, what is the supply chain finance? How it works? What is the benefit of the supply chain finance? What is the benefit to the SME sector? And how the SME sector can take advantage of this supply chain finance? And what are the lacking? What are the issues and problems and hurdles are there? So SME sector will understand through this today's webinar. All the stalwarts from different sector going to share their thoughts, particularly their experience and their views. Particularly those are SMEs are struggling, facing problem to get a supply chain finance. We are aware that Indian banking system is very very supportive to SME sector. During this pandemic, also the government of India announced 3 lakh crore this special package for SME sector, and MSME sector is taking advantage. 101 lakh 50,000 crore already disbursed. 1 lakh 50 crore is still available with the banks. So SME sector, those are not approached banks for this 20% additional loan allocated by the banks and by government. If you have any issues and problems, or if you want to go for a higher loan or higher support for the banking finance, they can approach SME Chamber of India. They can send their inquiries on president@smechamber.com or director@smechamber.com. So I'll not take much time to discuss more, but I would like to invite the expert from the supply chain finance, Sri Sanjay Desai, who is involved in this segment for last many years, and who is forefront for supporting SMEs, particularly from the Singapore, Indonesia, Malaysia, and other nearby ASEAN countries. And Sanjay Desai is especially given this the we can say responsibility to integrate the people from this sector, experts, integrate the information from the this sector, and how we can support SMEs and how we can guide the SMEs to take or avail this facility or particularly their benefits. So, with these words, I'm thankful to all of you for joining today's webinar, and thanks to all the participants, those are listening and those are going to listen in afterwards of the recording. So, I welcome all of you to join SME Chamber of India for your business growth, expansion, and of course, when you are during your difficult time, SME Chamber of India will be standing behind you to support you to resolve your issue. Thank you very much. Welcome, Sanjay Desai. Now, floor is open for you. Thank you.
Thank you, Chandrakant. Thank you, Chandrakant, for the opening speech and then laying down the foundation for today's webinar. I also want to thank all the delegates who have decided to give their precious time to us. You could have been somewhere else, but you joined this webinar. Thanks a lot. This means a lot to us because this is all about us. Thank my panelists who have made their time available to discuss all the challenges and issues that our SME entrepreneurs are facing and how we can mitigate them, what are solutions available. If you look at the panelists and their profile, which I think you should do by now, there is a tremendous amount of experience by way of very different professions that they bring in. So today's webinar is going to be a real knowledge sharing. My name is Sanjay Desai, and as Chandrakant has already introduced, I'm a supply chain professional based in Singapore. After 30 plus years working with supply chains and running global supply chains, I decided to turn myself into a professional, and now I'm advising startups and SME enterprises all over Southeast Asia. Small and medium enterprises are becoming even more critical today and important within global supply chains. Particularly responsible for this growth are increased globalization, modern cross-border trade, and escalating consumer demand for international products and services. Remember, services also are growing, right? If Indian SMEs need to ride on this demand wave, then there are a few imperatives. One, help from state and central government. Two, guidance and knowledge sharing from organizations like SME Chamber of India, which Chandrakant is now leading for the last 27 years, which is a massive congratulations to you, sir. And three, SMEs, our entrepreneurs, need to be manufacturers and exporters and not just traders. Remember this, you need to turn yourself into more manufacturing and export cross-border and not just trading. India as an industrialized nation is now continuing to aggressively grow Make in India movement to meet domestic as well as global demand. The current adversity caused by pandemic can actually become an opportunity for SME entrepreneurs. However, much depends on Indian government and SME entrepreneurs themselves how we approach this situation. Do we take it positively as a half glass full, or do we take it negatively as a half glass empty? And today we have an esteemed panel addressing issues which are closer around these areas. Let me request my four panel to self-introduce themselves, starting with Shailesh. Over to you.
Let me begin with our traditional namaste to everybody. It's an absolute delight to be here on this forum, and I salute Chandrakant Bhai for the phenomenal work that he has done for over a quarter century. And I salute Sanjay for having put this together with so much effort and so much care and diligence and hard work. Sanjay, I have hardly seen anybody doing that much hard work. So
Thank you, sir.
congratulations on that. Why am I here? There are only three reasons why I'm here. Number one, I love the SME and MSME sector. I think where India has 70 crore incorporated, unincorporated, small, medium, large enterprises. 70 crore. That is the heart and the backbone of our country in terms of services, in terms of manufacturing, in terms of infrastructure creation. So anybody who does not have love for this sector has no business to be on this webinar. So I'm here because I love the sector. I think it has a huge, huge potential for India, and India's future depends on this sector. How am I involved? I'm currently non-executive chairman of Larsen & Toubro Finance, which deals with a whole host of people who you can classify amongst this 70 crore people. We have more than 1 crore customers, 1 crore, in excess of 1 crore. So we know the heart, mind, the real issues of the small person. And therefore, that gives me some legitimacy to be here with you. I must acknowledge Larsen & Toubro's contribution in giving me some research support to make some of the observations that I will make today. And lastly, but perhaps quite importantly, I'm chairman of another company which is going to provide data-led abilities to lend to everybody in India. This is a company called Blue Wine Technologies, which has a service called Corpository, which has tracked all 18 lakh corporate entities in the country. It is now moving towards tracking all the LLPs and all the other enterprises in order that data-led lending can happen. As all of us are aware, our country is in the process of setting up the OCE and infrastructure. We already have UPI, which is a massive infrastructure that has been created, world-class, best in class from any point of view. The extent to which digitalization has overtaken India in terms of infrastructure is just amazing. And we are on the verge of establishing what are called LSPs. Those are lending service providers. So lending is going to transform from a banking or an NBFC, a loan sector, to a complete platform-based activity. So if Sanjay has a surplus of, say, 3 crores, and he wishes to lend it out, why would he put his money into a bank deposit, which will fetch him 5%? And then the bank will on lend it to the SME for whatever it is, 10, 12, 15%. Why can't Sanjay actually set up an LSP? And that infrastructure is getting created. And the company that I chair is going to provide the technology support to all these entities, banks, financial institutions. So we are trying to understand everything that makes an entity credit-worthy. That's why I'm here. And
Lovely.
I think that is the introduction I would like to give.
Desai, you can start.
Sure. Thanks, Chandrakant ji, first of all, for organizing this. Sanjay has already thanked you, but I'm also equally thankful because I come from an Indian scenario, an Indian banking scenario, and having worked with the Indian banking industry for 30 years, slightly above 30 years, I have had the pleasure, experience, of financing, and almost out of that, almost 15, 16 years I've spent in corporate banking and financing large corporates, medium corporates, small corporates, horticulturists, floriculturists, you name it. So my knowledge may be slightly dated because I moved out of banking industry somewhere around 2000, mid 2015 or so. But still, having said that, it was, and I know the things have changed today because I have been reading newspapers. So with that background, from banking I moved to IT. I was CEO of an IT software development firm. I was also an investor. I'm still an investor into that firm. And I've just moved to director because I recruited a younger guy. I'm 60 now, so I recruited a 40-year-old guy who can devote every day's 9 to 5 time for the organization. I'm also involved with a dairy project, incidentally, as an investor and as a strategic advisor. And the dairy project is also doing extremely well, which is SME. We own our cattle. So I wear a banker's hat. I wear some kind of an entrepreneur hat, little bit of an SME. So with that background, I hope I should be able to contribute something that what is there in my gray cells. I'm losing a lot of hair already, but still, let's hope I have we'll have a good session. Over to Sanjay.
Thank you, sir. Shirish.
Yes, Sanjay. Thank you, Chandrakant, for the invitation. Esteemed panelists and all the delegates who are listening to us, thank you for your time. Quickly, sort of giving my introduction, I did feel a bit intimidated when Shailesh was giving his introduction and vast experience that he has. Extremely useful, I'm sure, for the delegates. A little bit about myself. I've been working for close to 20 years. So I spent first few years of my working life in India. Then I moved to Malaysia, and then for the last 13 years, I've been based in Singapore. All my life, virtually 19.5 out of 20, I've done trade and supply chain finance. So I've been a transaction banker for pretty much all my life. Having worked at 3 different banking institutions, global banking institutions, I've been privileged to look at trade finance in every part of the world. So my first employer was a large North American bank, made me exposed to the North American trade and then African trade and a bit of European trade. Then I moved to Singapore and I've looked at the Asian trade. And Asia is a very large, complex, interesting region as compared to any other part of the world. And my last few years have been purely dedicated to supply chain finance. Sanjay and I have been on a couple of other forums together. And Singapore, as Shailesh was mentioning, is kind of a innovation hub in some respects for the whole world. And a lot of cool solutions are coming out. So, for example, you mentioned the database lending practices, which this technology company is providing. In my previous life, we have looked at using artificial intelligence, using corporate portfolio data, looking at delinquency, non-payment, repayment, all kind of details, and how to make credit decisions a lot more faster. And it is at the same time encouraging to see that non-banking players are coming and joining the party, because whatever else has happened in the last 6 months and even in 2008 and 10 teaches us a very important lesson that if the whole world continues to rely on banks and banks alone, it's going to be a problem. I'm doing a disservice to my employer maybe, but the fact of the life is that the ecosystem is large enough for banks and non-bank financial systems to kind of coexist, thrive, and then grow and then sort of kind of support the whole system. We'll keep it brief because we have a lot more to go through, but happy to be here. And I hope I can contribute in some manner to the seminar. Thank you, Sanjay. Back to you.
Thank you, Shirish. Chandrakant, do you want to introduce yourself again, or you're done already? Because I don't think so.
Not necessary. You can continue.
Exactly. Thank you very much, sir. So let me start the ball rolling. And as we always say, right, before I do that, but Shailesh is something that you just tap my mind is, thank you so much. आपके मुंह में घी शक्कर, मेरे पास तो 3 crore नहीं है, but you have given me an idea how can I reach to that, and I need to keep my subconscious mind now very strong how fast I can reach to 3 crore. Thank you so much for the advice today. It's amazing. I think my day is done today actually in a way. So let me start at the root, right? And as every time when we start a bigger activity, you start with the Sri Ganesha, and I want to do that. And Shirish, I want to come to you as a banker and say, tell me what is supply chain finance? And I know a lot of people would know this, but the element that I want you to bring up is, are these solutions different from each other, or they are complementing or duplicate? Just a bit of a thought from you.
So I love the way you started this thing with Aapke Muh Mein Ghee Shakkar, right? There's a very old story, and I'm sure we have all heard and read about it. 5 different people being told, the blindfolded man being told to define the elephant, right? We've all read and heard that story. And because they can't see the elephant, somebody touches the tail and they think the elephant is this round, cylindrical thing. Somebody else touches the ear and says, oh, big flappy thing, it bends and all that. And supply chain finance, unfortunately, has been complicated by, a lot of reasons. It's not, a bank's fault or a technical committee's fault or ICC's fault. It's been complicated by a lot of people. But I use a very simple definition, which was taught to me by my first boss in Citibank. And he says, trade and supply chain finance, if you continue to be in trade, people will tell you trade is this, trade is that, and banks will have 15 products. But keep one thing in mind. At the end of anything, trade or supply chain, there is a buyer, there is a seller, right? So somebody is buying something from another person. You as a bank, your job is to make sure that the seller gets his money in the most cost-effective manner and in the most risk-free manner. At the same time, if you're serving the buyer customer, your job is to ensure that his payment obligations are secure by a secure supply chain, if you will. And that's how you will be happy in this job. And I've kept that definition in my head. And believe you me, it has helped me. While we have come up with factoring and forfeiting and letters of credit discounting, bill discounting, and negotiable instruments, and 15 other products, it's very simple. There is a buyer, there is a seller. So if I were to answer your question, Sanjay, what is supply chain finance? I'll break it, supply chain and finance. So supply chain is basically the physical supply chain. And the example I keep going, maybe because of my Japanese bank experience, is that imagine a Toyota assembly or even a Tata Indica assembly in India. And there are 200 components that need to be provided to every single person on the assembly line to make sure that the car rolls off in time. That's supply chain. That's your physical supply chain, right? Then add the financial part to it, the financial supply chain. And that's why the word supply chain finance. So if I can ensure, if I'm the banker to a Toyota or an Tata Motors, if I can ensure that every single one of those 100 components are supplied to Tata Motors plant in time, and how can I do that? I'm not a logistics company. I'm not a component manufacturer, right? I'm a bank. My job is to ensure that those suppliers who are supplying these critical components to Tata Motors are provided with sufficient liquidity, money, working capital, whatever you want to call it, at a reasonable price level, because most of these suppliers are going to be SME level, and which is what the subject of this discussion is. You cannot squeeze them. You need to make sure that they are, being a loyal supplier to Tata Motors, they're given due credit for that. And that's what the market calls buyer-led supply chain financing. So if the buyer is a very high-rated, big, reliable, investment-grade corporate client, his thousands of suppliers should get benefit of their association with these large buyers. And if I were to look at my actual supply chain finance experience out of Singapore and many markets that I've covered, it has always been a very consistent theme. There's generally a very large buyer and much smaller suppliers. These suppliers get benefit of the much better credit rating of the buyer, and hence they can get funding at a reasonably good cost of funding. And at the same time, which is very important again in Indian context, because we love collateral. Sabko security chahiye. Give me your plant, give me your machinery, personal guarantee de do, check de do. And that's the conventional way of lending. When Shailesh was talking about this AI-based solution where people can use data and predict the non-payment history or probability of that, how can you factor into that and say that, okay, if it is Tata Motors get these components every 60 days, 90 days, and Tata Motors is going to issue an invoice and they will accept to pay. Now, the money will come 60 days, 90 days later to the supplier's pocket, but he needs money today because he needs to pay his suppliers. He needs to pay for his rent. He needs to pay for his utility bills. He needs to pay wages to his employees or the workers they're working in the factory. So, in short, supply chain finance is nothing but making sure the supply chain functions. The F is not for finance, it's actually for functioning. To make sure supply chain functions, you need finance. And that's where banks come into picture. There are various forms of it. In India, again, when I worked with one of the European banks, used to frequent India a lot of times. So there are automotive sectors, pharma sectors, white goods companies. So we've done a number of those programs where we kind of relied on, again, our anchor client, if you will, the large buyer client, and at the same time sort of kept funding those suppliers. And again, you can stretch the argument not just on the buying side, you can also go on the sales side. In India, very common product is dealer financing or distributor financing. So we can do a lot of that as well. So if you take a broader definition of supply chain finance, you should look at both sides, buying and selling.
Brilliant.
Lovely. Thank you, Shirish. And your answer actually reverberates in my mind, because I always tell my SMEs and my startup customers that if you need money from bank, you actually need to prove them that you don't need it, you don't want it. Only then you get the money. So that is amazing actually. But this is really the way it works. So that's a fantastic start. And Chandrakanji, I will turn to you to understand what are the motivational factors for SMEs to actually use supply chain finance. Why should they use it?
See, the two things are there. Supply chain is very important for SMEs now because most of the SMEs are facing big problem to get funding from regular banking also. Um, Shailesh bhai must be agree with me that most of the SMEs in India are facing in three-level finance. One is a regular banking finance, trade finance, and particularly supply chain finance. Because most of the companies are not, rather buyer companies are not authorizing their, invoices sometimes.
Hmm.
That is one issue come up. And most of the SMEs are facing problem when they approach particularly for finance, because most of the large corporate or the medium-sized industries or any other companies, those are buying product from SMEs, they are not considering their supply instantly. They create some issues like a technical issue, quantity issue, quality issue, or sometimes the delay about approval of their product because of the they want to pay late.
Hmm.
So these are the technical issues we have to consider in particularly. But now the Minister of MSME has given the direction to all the companies in India that they have to pay in 45 days. And other, this is a law. This is an act they have created that any company in India, large corporate or public enterprises, when they're buying any product from any SME, MSME sector, they have to pay in 45 days. But because of the technical issues, I said, either delayed in making payment or delayed in approval of the product supplied by the MSMEs. This is the point.
Lovely. Thank you, Chandrakanji. So two things. One is the approval process, maybe, and then the technical point. Taking on this forward, Nandkishore, we continue here that the biggest hurdle Indian SMEs face is the lack of capital. And we actually heard that, right? I want to hear an SME view from you, as well as a former banker yourself. Is there a role for either NBFCs, non-banking financial companies, or any other companies to actually come into the picture and add value at this time?
Oh, thanks. I do believe. I mean, to an extent, I really agree with you, because there are data points and there are various data available on the net everywhere. So Shailesh Bhai has already said there are 70 crore large, medium, small corporate. That's a humongous number. It's a huge number. Out of which SMEs would be probably accounting for maybe 75% or 80 or maybe 70% of SMEs and SMEs put together. They employ about 120, 130 million people. They contribute to 29% of the country's GDP. This overall supply chain finance market in India is estimated to be between 10 to 15 billion US dollars. I don't have the number for SCF market exclusively for SMEs. Having said that, yet there is also a UK Signa-led RBI committee, expert committee report which said that there is a credit gap of estimated credit gap of rupees 20 to 25 trillion for MSMEs. So obviously it is not a myth, as you said, or as you have asked me. There is definitely a shortage of credit towards the SMEs and SMEs. Now, now the thing is that you asked me specifically whether NBFCs can play a role. NBFCs do or can play a role. They have been playing a role. But as Shailesh Bhai has rightly pointed out in his opening remark, the fintechs, Mr. Sanjay, have really come to the fore, and they have started playing a huge role. And fintechs probably are more suited because of the technology advantage that they have to rescue the SMEs out of this SCF vacuum. So there is one of the surveys again conducted by Gariba, which is a global strategic treasurer, consultant on strategy as a strategic treasurer. So they say that as Shailesh Bhai said, there are a lot of corporates who have cash excess. So most of the corporates fluctuate between cash excess and cash deficit. And when they have cash excess, they can actually deploy it through the medium of fintechs for the SMEs who require for funding this supply chain, which are 60 days, 90 days, 45 days, 30 days LCs, and so these are the fintechs actually more than the NBFCs. Fintechs in partnership with NBFCs or fintechs, and a lot of fintechs have turned NBFCs. They applied for NBFC license and couple of them have got it also. And they have also partnered with banks. So they actually have a huge role to play according to me. So
Okay.
so in India, I think we can have, or we would have a lot of supply chain fintechs and a lot of using their technology advantages by giving API-based solutions or by helping banks to have asset-light models by taking these assets out of their books. So these are the rules, or these are the methods by which, according to me, fintechs will have a much larger role to play going forward.
Yeah. So, Nandkishore, one question is why fintechs have a larger role and why they are being successful versus the normal nationalized or international banks in India? What are they doing different? They have more cash, or their regulatory and compliance standards are different? What do you think? A little briefly.
Interesting question. So you are asked me to, more or less think about what are the banks doing, or what were the banks doing, and what are the fintechs doing now. So
Yeah,
if you
there's a banker here. I'll go to him as well. Careful.
yeah, exactly. If you see what are the bankers' strengths or bank strength, they have a long vintage. Typically, I'm talking about Indian banking scenario. They have got experience in financing. They also have a huge database. They have got a strong distribution reach. Now, these are bank strengths. Plus, they also have, and Shirish would readily agree with me, both of us are bankers, they have got better skills to assess credit risk and also better informed about provisions and do's and don'ts of SCF, if there is any regulatory provisions and all. Particularly more so in the case of cross-border financing. So that is the bank's strengths. Okay. But banks also have some disadvantages. They are slow in decision making. They have a lot of rules and regulations. Now, what are the fintech strengths? They're nimble, agile. They do not suffer from baggage of the long past. They are technology driven. We already had a fantastic insight from Shailesh Bhai about how lending service providers, one of the technology firms that is associated with, using analytics, so using information analytics. They're fast in decision making, and most importantly, they can come out with highly innovative products versus the traditional products.
Okay.
So, for example, you can have cash discounts. So there is a priority vendor is an online platform, an Indian fintech, which allows the buyer to pay its suppliers early in exchange for cash discounts. So it works with corporates, and then the buyers can, the sellers can actually say, I need funds, I'm ready to offer 20% discount. So it's like a bid model. So
Sure.
to accept that 20% discount and go ahead or not. So that is where it's such a dynamic platform, and it has, so the interest cost, which is essentially an interest cost, will keep fluctuating. Sometimes it will be in favor of the buyer, sometimes it will be in favor of the supplier. But that's the beauty of the innovative product.
Yeah. So Nandkishore, this idea is actually traditional versus technology versus the approach part actually. Yeah.
Absolutely.
Understand. Thank you. Now I want to go to an independent view and much senior view in the corporate board, right, Shailesh? Right. In the recent union budget, there was a proposal to amend factor regulation, right, to extend invoice financing to SMEs and NBFCs, and the recommendations for the application-based loan product. And you actually talked about the application-based loan products. Is this in effect now, and will this help SMEs, and how?
Well, the provision to make sure that SMEs have access to this last mile funding by way of factoring has already been proposed by the finance minister in the finance bill. It is in this session of parliament that that proposal will be flagged forward. But before it is flagged forward, we have been visited by this enormous COVID crisis. And therefore, that has given us the need to rethink the entire business model. You know, as bankers and as people who provide finance, we think of whether we need supplier finance, buyer finance, we need short-term finance, long-term finance, what should be the rate, what should be the interest, all of this. But the real thing to look is to go deep into the business model of every person. Finance, to my mind, is simply the bridge between today and tomorrow. And a lender lends only because he or she believes that tomorrow will be better than today. It's as simple as that at the bottom. And if you know that the business model of the recipient is getting disrupted as it is today, then you can make the provision that at the end of the day, when you are completely struggling and you are strapped for cash and you can't pay your next bill or you can't pay your next wage, you can go to the factor. Very costly funding. It is not cheap, and therefore it is not something that, but it's available. At least a person who is choked will be able to unchoke and actually go forward. But the real thing to do is to bring in technology, bring in business model advice, bring in ways to show people that you will need much less finance. That is the biggest role that today we are playing or trying to play in rural markets, for example. And therefore, I, for one, would want to say that all the regulations that India is trying to push to make sure that the farmer has freedom to sell wherever he can are absolutely necessary for 86% of the farmers of India. And this is where we need to put our attention on the business model, on technology, on making sure that the need is well defined, and making sure that where the need arises and where it is, as Shirish very brilliantly described, just a bridge between tomorrow and today, it should be available in plenty. It should be available for the asking. You can't sit and normatively try and decide how much money should be given to somebody. You need to track that person's track record, the digital footprint, and then decide that you want to lend. And then you don't ask the question. If the person is digitally proven to be a high scoring, good credit risk, then I'm more inclined to make sure that you support the lending because you know the business, you know the person, you got data on that person, you've done the credit appraisal, and you open up the taps, make sure that the person can succeed and grow.
Lovely. Shailesh, two things stuck to my mind. One is rural business model, and the second one is last mile funding. So we'll come back to the last mile funding. I would like to go over to Chandrakantji from a governance perspective, right? And like more government schemes introduced, right? Government launched something called Niryat Rin Vikas Yojana, right? Which is called Nirvik scheme to provide higher export credit disbursements, enhance insurance cover, and actually reduce premium for small exporters. Now, how is the penetration and the adoption of this scheme as of now? Do we have any data?
See, usually most of the SMEs or companies, those are involved in a export or import business, and those are attached with the Ministry of Commerce and Industry, DGFT, or at Exim Bank. Of course, they are availing this facility, but somehow those companies are recently started their business, export business, and they are not aware about all these facilities. So like a chamber can support them and providing this kind of vision. But data wise, we cannot assure or we cannot give the information. But I can tell you another point. In India, most of the MSMEs are, I think Shailesh Bhai will understand this specific issue. Most of the MSMEs are facing problem to get trade receivables. Okay, and the trade receivables is the bigger hurdle for MSMEs for to manage their cash flow. All right. So I am the member of RBI Monetary Policy Review Committee, and regularly we meet the governor for a discussion on the micro to macro economy and what are the developments happening in a industry and particularly the SME sector. When Raghuram Rajan was a governor, at that time I realized that the MSME sector is facing problem for what purpose? For trade receivables and working capital facilities. So I pursue this matter with the governor that either you change the NPA nomination or definition, okay, NPA definition, and mostly they can change the system of particularly for our trade receivable system. They said, no, we can't change the definition of the NPA or the NPA norms. So we can, introduce some other platform. So after the deliberations, various meetings, they have introduced the trades platform in India. The trades platform is a very useful platform for MSME sector, where MSMEs can list their bills, invoices, and they can get their funding in 24 hours. So these are the schemes government has introduced, and now three companies are already in market. They are doing this, but hurdle is there. All PSUs and large corporate are not yet enroll or registered on that platform. So we are pursuing the government, and let's try on that. But so coming to the point about how this financial management system can be utilized by the MSME sector, the MSME will start using this system. I'm sure that they will compete to the world market because of the lack of finance. The industries in India or SMEs in India cannot reach that target level for the export or working or we can say turnover size.
Yeah, and Chandrakantji, what do you think is the reason behind last comment? Right, we cannot, our SMEs cannot, are not able to export. Is it something product specific, or is it something market outreach and the network is not there, the exposure is not there? What do you think is the main reason? Maybe one or two.
See, first of all, we have to be competitive. Okay, the competitiveness to be enhanced, for the international market. Number one. Number two, we should focus more on the segments, the potential market, emerging market, because most of the MSMEs, they try to go to USA or North Canada or other countries where there is a lot of competition. How we will compete to the Chinese? Forget about the world market. Start with the nearby market, Sri Lanka, Bangladesh, UAE, or particularly Gulf countries. Then you can slowly enhance your connectivity in African market. ASEAN market is also available if you have a quality product, if you have a product which is useful for that country. But MSME should approach the agencies. The agencies, those are working for identifying the new markets, understanding particularly the product, what kind of product they manufacture. They have to study about it internationally. If I'm producing this kind of quality product, this quality product is available for that market, or it is useful for that market, whether my price is perfect, whether my price is competitive, or whether I can supply on time. Because most of the buyers, those are facing problem when they buy from India. They said delayed. Most of the exports are delayed because of many. Now see, look at the onions. Immediately the government of India has banned the onions. Most of the trucks and even some product is lying at the various ports. This cannot be kept for 1 month, 2 months. So government also should think that when to be impose restrictions, when to be withdraw the restrictions, and when to be discussed to the concerned authorities, particularly for imposing this kind of restrictions.
Yeah, sure. Thank you. Nandkishore, I'll come back to you, not immediately, but on this point which Chandrakant has made, and that is about competition and segmentation for SMEs. I'll come back to you. Let me first reach out to Shirish and ask him a basic question. Is there a difference between domestic and cross-border supply chain financing, whether documentation-wise, disbursement criteria, and are these very clearly communicated and understood by SMEs?
So, I mean, yes, there are very big differences between domestic and cross-border supply chains. It's just like buying, from your own country as well as going to the outside market, right? But more often than not, people who even practice supply chain finance, they invariably think about supply chain as international or cross-border supply chain finance. Very frequently, people forget the fact that there are very large countries which are more than capable of running their own domestic supply chains, and they run into billions and trillions of dollars. India is a good example. And I can tell you, Indonesia, for example, here, 200 plus million people, geographically such a large country. China, of course, is known to the rest of the world. Malaysia, Philippines, much smaller, but still capable of running their own supply chain finance systems, right? And so the obvious answer to your first question, yes, there are differences in domestic and cross-border supply chain finance. I think the tricky thing that I can share with you, and it's also from doing some of the regional supply chain finance transactions. So if you look at large FMCG players, levers of the world or P&Gs of the world, they run supply chain in 40, 50 countries at the same time. And I was fortunate enough to be part of some of them, at least in Asia. And it is very complicated. In Asia, in Southeast Asia, if not 1,000 kilometers, couple of 1,000 kilometers, there are different countries. And they speak different languages, the different currencies are different, the cost of borrowing is very different. And hence, if a global multinational corporate expected anybody, forget about bank, anybody to provide one consistent, seamless supply chain finance solution to their suppliers or their factories in all these countries, they're living in a fool's world. It's just not possible because different countries, the suppliers, the buying behaviors are different. You could be buying the same product in Indonesia and Malaysia and Philippines, and the suppliers are going to behave very differently. Regulatory kind of changes also make it a bit more complicated. Again, we both are based in Singapore. We know enough about this, and I'm sure our team panels. But when I've run the regional supply chain programs out of Singapore, I just could not give the same program to the same client in more than 3 or 4 countries at the same time. Sure. I'm saying a couple of 1,000 kilometers, but in the case of Malaysia and Singapore, in 50 kilometers, we are in a different country, and that country operates completely different than what Singapore does, right? So absolutely, there are a lot of these nuances about running a domestic versus a cross-border supply chain finance program. Sure. I just want to sort of touch upon one of the things which Shailesh and Chandrakant both mentioned about trade and sort of using that online platform to get the discounting done in a very effective manner. I think RBI, did a fantastic job, and I didn't know, Chandrakant, you were part of the initial discussion, so thanks for sharing that. But it is such a good platform. In one of my previous banks, we had a lot of, SME clients who have already now registered. This 45 days payment condition is a huge boost, so that more and more companies can start paying their payables on time. There are a lot of other private players in India. So Threads has 3 platforms, as we all know. But there are a lot of other private, fintech guys who have developed something similar. But it remains to be seen whether, the benefits of this platform can be realized and every single SME in the country can sort of come on board. Similar initiatives are being used in many other markets. I'll just add one last thing, and, I'll pass it back to you, Sanjay.
I'll start charging you now by minute.
No worries. Chandrakant is paying for everyone, so I'll keep talking.
Sure.
We think about using data, right? So there is one other interesting concept that I have worked on here, and I continue to be involved in this. We've called it deep tier financing. Now, what is deep tier financing? Typically, there is a buyer and there's a tier 1 supplier. So these are the big guys, right? And every big corporate will have thousands of suppliers. When they go to a bank, they say, onboard all my 5,000 suppliers. No bank in the world can do that. It's just not possible. The cost is not commensurate to the profit that they make, right? Simple. And then there are tier 2 suppliers, then there are tier 3 suppliers, right? Suppliers, then there are suppliers. Everybody, including all the big banks and fintechs, have always looked at the top tier of suppliers coming from the buyer. At best, maybe tier 2. Nobody has seen the entire thing. Now, using data, it is possible for you to say that when the initial purchase order is raised by this large multinational corporate, that purchase order results into 10 other purchase orders down the chain, because nobody is producing anything in their house. Everybody's buying from somebody else. There's a bit of a value add, in small quantities, big quantities, then it's being sold. So some really interesting developments are happening in that space. I am personally not aware if in India anybody is working on it, but it's something definitely which is worth exploring. What you can then explore is that if you know that these are 7 suppliers in one financial chain, from the end buyer all the way to the last supplier, if they have a trading history, if there is a data intelligence that can be used in terms of buying behavior, the payment patterns and everything else, if the final buyer is issued an invoice, let's say for 1,000 rupees, and the 6th supplier must get 75 rupees out of it, can you not use the same purchase order and finance not just the tier 1 supplier, but tier 2, tier 3, tier 4 suppliers as well? Some really interesting proof of concept, and some guys have already done it. I know of some players in China, they've done it. And I'm sure in India, people are very enterprising. They're thinking about it. but this is something that can help the industry as a whole. Sanjay, you're on mute. We can't hear you.
Okay, sorry. So coming back to Nandkishore, the point that Chandrakant made was competition into international market and segmentation. So you are in yourself a SME exporting software. You have clients that are actually using your software for for their business from a flow perspective, from a supply chain perspective. Do you see a similar trend? And can you just say why we are not competitive in international market? Is it the cost of the input, or is it the cost of compliance is way higher than into the international market? You're mute. Nandkishore, you're mute.
I'm sorry.
Yeah.
I'm sorry. First of all, I want to give compliments to Shirish because he has introduced me to this new concept called deep tier financing. Brilliant. I mean, as a banker, I really appreciate. Now, coming back to your question, Sanjay, in software exports, I believe we are competitive and we have had a history of good software exports. So that way, I don't see that much of a problem. But in other segments, as Mr. Chandrakant said, there are issues where we have to be competitive both on cost as well as on quality. So quality, I don't see much of a problem. We can actually do as good a job as any other. I mean, I would like to believe so if you put your heart and soul into it. But what happens is that the cost, there are a lot of taxes, a lot of costs, and then the benefits, being offered by the government to the exporters are not good enough to, subsidize the cost and then be competitive in the international market.
Okay.
I can give you, from drawing from my banking experience, I can give you one or two examples. First of all, I was financing, as I said in the beginning, I was financing a lot of horticulturalists and floriculturists. Now, the floriculturalists used to send their products to Dutch auction, Al Samir. It's a very famous market, Al Samir market. So we had to be so quick in advances, in giving our advances and at as low cost as possible, that because it used to be always air freighted because the flowers had to remain fresh, and a simple rose stem which is 60 inches, we hardly see it in India, but those are popular in Europe because you can keep them in the tall vases, used to come out as high as $5 and $10, for one stem of rose. But that is not possible in India. But if that stem is not exported in good condition, so the entire supply chain along the way, right from it is manufactured in Nasik, kept in a reefer van, reached Bombay tarmac, and then sometimes the customs will take a lot of time in stuffing and destuffing, and in the process the goods may die. Even the flowers may actually die and will not even fetch 20 cents. So that was one. Another thing was in 1997-98, the grapes exporters found themselves in a very tricky situation. Europe is a big market, and they come in a niche area where Chilean exports are not there, American exports are not there. So Indian grapes have a good market there. So suddenly, one particular year, Europe changed the residual level requirement from 0.1 to 0.06 or something. I don't remember now, 97, 98. So that time, all the entire grapes which landed on Europe's shores had to be sent back because nothing was accepted. And all the grape exporters got was a big zero, and they had to even pay back for the cost to get those bloody dreaded grapes back. So that was second example. Third example, which Chandrakant said, was government changes. Onion exports he just spoke about. There was suddenly, good from environment point of view. Plastic ban was good, in India, in Maharashtra in particular. But there were a lot of SMEs and MSMEs which went out of market export, who couldn't produce within India. I'm not talking about exports, but even within India. So they had to find different, business model or buy, manufacture those. So that is where those segmentations and competition will come into play. And I spoke more from a banker's standpoint. But that's why, we have this advantage or disadvantage of being competitive or not being competitive. And that's where we suffer. When I say we, it's the Indian SME exporters.
Sure. So basically, you're talking about ecosystem, you're talking about business dynamics and, government regulations and changes, even for international market. So let me go back again to the board kind of a question. And Shailesh, India pulled out of RCEP, and I know you can talk about a whole day on this, but when India pulled out of RCEP during November, actually, is it good for Indian SAPs? Because I think now we have internal capabilities, we can start exporting more because many countries will slowly start pulling out of China because made in China may not be required one, and made in India can actually have a precedence. What's your thoughts on that?
The time that we actually walked out of RCEP, it seemed like a decision that was in the broader interest of our country.
Yeah.
I, for one, have always held the view that only free trade will succeed in the long run. I'm a great public and private supporter of free trade. And I would like to see the tariff and non tariff barriers to be brought down. Right now, I can't recommend that they be slashed and removed immediately because I don't know the whether we can suffer the competitive price that we might have to pay. But we need to strengthen every sinew. We need to strengthen our technology, our knowledge, our ability to organize business, our ethics. Make sure that no matter what happens, supply reaches on time. And the quality cannot be such that the grapes come back or something which should never have been sent out is actually ever sent out. Now, that's where I believe we need to do a lot of work. So the decision at RCEP at the time it was made was perhaps a overall basis good for the country, but we need to scale back because it's our MSMEs are dependent 35% for their inputs on imports. And the value addition that can happen if tariff-free imports come in can be significant. We need to get into, for example, I've been proposing over the last 3 months at least, that all MSMEs should consider getting into additive manufacturing. We have always done subtractive manufacturing. It has become obsolete. And that is why our costs are higher. And we sort of have so many returns. To get even one return from an international destination is killing. It can completely destroy a business. We need to get into extreme high quality digital manufacturing, control processes which are stable, rock solid, and we need to be able to face competition. India has to stand up and become a free trade proponent. I propose that in services in a big way.
Yeah.
When I was at Cancun many years ago for the World Trade Talks, and I propose it for almost everything because I do believe that we need to have the advantage of making sure that we can draw the best from the cheapest sources in the world, add to it, make high quality products, and supply it with
Exactly.
confidence.
Lovely. So tariff-free imports, additive manufacturing, and digital economy. So three takeaways today from answer. Chandrakantji, I'll come back to you. Taking this one step forward, tariff-free imports, right? Low-cost imports, Indian government has made it actually no longer worry for SMEs, since the tax levied on imports of goods is very similar to the locally manufactured products per the recent amendment. Is this being practiced now, and is it helping SMEs? What's your thought?
You want to indicate from China particularly?
No, made in China is banned.
No,
So
I
other
think
countries.
in your mind, looking the big picture is China.
Yeah. So taking a thought from exactly what Shailesh said, right? Bring in products, add value, and re-export them, right? Is this something that is possible now? Because for the low-cost product imports, they are actually tariff-free, although not actually tariff-free, virtually, or they are actually cost equivalent.
See, I found one very interesting activities in Vietnam, Indonesia, particularly Malaysia. They import some raw material from the different parts of the world, and they reproduce and they reassemble and they export. Okay. In India, there is no that much awareness about Indian companies. Hardly, I think, suppose say like in 10 crore companies in India total business, maybe hardly 10 to 12,000 companies must be doing this kind of business, not more than that, because Indian market is very bigger market, and we are looking at first our like a prime minister said, local for vocal for local. So that is one of the interesting thing. But now, what SME should focus more on even though if you're importing product raw material from the any parts of the world, you should focus more on the reassembling, redevelopment, redesign, reinvention, and start selling in the world market. That is one. And innovation and invention, this is the additional thing they have to look at now, because this is the right time. When this corona started and when the world market stopped the buying from China, the opportunity for MSME sector has increased like anywhere. And that's why the government of India is focusing more on how these companies will, self-reliant to manufacture here for local market, manufacture for global market. But now the coming to the point, I have received very one silly question from one of member that what is the difference between supply chain finance and factoring? Answer.
We have a banker here, Mr. Shirish Garg. Please take over. Quick one, yeah.
Sure. And you're not going to charge me for this one, yeah?
Of course.
Yes. Not.
So I think the origination of such questions, and I've been asked this question before as well. I think the traditional definition of supply chain finance has always been a large buyers buying from small suppliers, and how can those suppliers get money using the credit rating of the buyer. So when banks do supply chain finance program, they are not taking the risk of the supplier. Supplier is risk free. They can't even write the risk of supplier. They're just taking the risk of the buyer. Is Tata Motors to pay in 45 days? The answer is yes. Can I discount Tata Motors risk at whatever pricing? And it's going to be slightly higher than at price that Tata Motors gets funding from the same bank, but it's definitely going to be much lower as compared to when the supplier goes on his own and goes to a bank and get the money. Now, factoring always has been a seller-led product. So if I were to simply give one difference, supply chain finance is buyer-led, factoring is seller-led. You are a seller. You could be an MSME client or company based in India or anywhere else. You have sold something and now you're waiting for the money. Now, not all your buyers are going to put a supply chain finance program in place for your benefit. Not all buyers are going to do that. What options do you have then? You have two options. You can put in your own money and burn the midnight oil while you run your factories and pay the wages and all that. Second, you can borrow. You can borrow for your friends if it is a family-owned business. You can borrow from banks if it's a private limited enterprise and you've got balance sheet, and you've got some financial capacity. Third option, which has now recently been created, is marketplace. So you can say, I have sold these goods worth 50 lakh rupees. I'm going to get paid in 30 days or 45 days. I need money now. Is there anybody in the market who wants to pay me? So there are platforms like Threads. There are many other private players who are doing it. Shailesh very rightly talked about these LSP standards. So if Sanjay tomorrow, when he writes this check of 5 crore rupees and sends it to Shailesh saying that put my money. So there could be lenders of all types in the market who would come and support this factoring, right? So I just hope I've been able to give some light. Keep it very simple. Supply chain finance, generally buyer-led, factoring, seller going to an institution and trying to get some funding against his invoices.
Yeah,
Okay.
Shirish, wonderful
Another point, Sanjay ji.
Yeah.
For the knowledge of our SME sector and particularly the Shailesh bhai, I want to hear from you. Since you are heading the largest NBFC of India, I think so.
Number 2 or 3.
Yes, you are the largest NBFC according to my knowledge. And why Indian financial institutions are not focusing on the factoring in India, particularly for the MSME sector? Because I'll tell you, when I met the MD and CEO of SBI Global Factor, I forgot his name, and what he said, we do not have faith on SMEs.
No.
I'll tell you. I want to hear from you. We do not have a faith on SMEs, and that's why we don't focus on SMEs for the funding.
No. I think
so I want to hear from you, and I suggest you, when you are meeting with the bankers, I suggest you the factoring business should be on a top level in India.
No.
Yes.
I'm absolutely with you, Chandrakant bhai. There's no question of not having faith in MSMEs. We know that is the backbone of India. But we need to be able to distinguish based on the MSME's own conduct. See, what is missing in our economy is knowledge. of how has this person behaved. Suppose the factors the invoice, and then the payment on the due date does not come. Is the MSME strong enough to make good that payment?
Yeah.
What will tell him that story? It'll be this MSME's past digital footprint as to whether he has paid things on time, whether he has litigations going on all over the place, whether he has been regular in complying with Provident Fund dues, GST dues, and all of that. If he has a good sense of this enterprise, that yes, is regular in payment of taxes, fair to employees, has a good track record, has never let down his creditors, then he will have the faith. And he does not have the wherewithal to go around the whole world and try and ascertain all of this. This has to be provided as a service by a data-based company. You know, the way data is available in our country is astonishingly poor. To just make sure that you are talking about the same human being that you want to refer to is itself a huge challenge. I can write my name as Shailesh V. Haribhakti, Shailesh Haribhakti, Shailesh Vishnubhai. I have got 100 combinations. And every time I use my name, if I use it differently, it becomes very hard for the system to capture all the data on me. So that is what requires all of this mopping and cleaning and making sure that you are using the right kind of intelligence to make sure that you're talking about the right.
Yeah.
But I think the faith in MSMEs is very high, and I have no doubt that factoring will take off. Let this law come. There has to be some protection for the lender also.
Yeah.
That is what this law will give. And we should see very soon factoring take off in India in a big way.
Lovely. And Shailesh, I'm not challenging your thought, but I'm just reaching out to Shirish and ask Shirish, do you think in Indian parlance, in SME sector, will bank really extend product or inventory-based factoring, which is the ownership remains with the company, but actually a company or a bank or NBMC lends money, so the liquidity of a SME goes up, inventory backs off from the books, and at the end of the period, the SME pays to the bank. Will this kind of product inventory-based factoring come into India, and will banks participate? Will banks allow SMEs to participate in that?
So, to be honest, because I've been out of that market for many years, I don't know if there is any regulatory restriction, but I know for a fact that warehouse-based financing does happen in India. It's just like you have security or collateral of some sort sitting in some warehouse, and you can use that warehouse receipt, go to a bank, and get funding against it. So those products are there, but I think two things which are very important from my point of view. One is, and it comes back to what Shailesh said, every lender hopes that tomorrow will be better than today. It's all about intent. I don't know, whether everybody is aware of some of the most astonishing fraud cases that came out of Chinese warehouse financing.
Yeah.
Qingdao warehouse financing, right? So you had a warehouse receipt and you made copies of those warehouse receipts and you went to 10 different banks and you said, I've got this much of goods lying in this warehouse, give me money. And guess what? All 10 banks, they relied on your word, right? Because they believe tomorrow will be better than today. And they thought you were a good willing customer. They paid you money. And then, voila, when you open the door of the warehouse, probably there is nothing inside. Forget about even one bank getting back money. There's nobody who's got the money. So I think the first and foremost thing is, and I will mix this with another component I want to add, which is the recent 8 months. People believe there is a flight of liquidity from the market. Absolutely no. There is more than sufficient money available into the banking system. Most governments, including the government in India, has infused tons and tons of money into their domestic economy. Everybody knows MSMEs are the most important sector to be protected, not just in India, everywhere, globally.
Yeah.
And they are at the verge of kind of, losing jobs and people and all that. So these solutions are always there, Sanjay. The important thing is that the intent to pay must always be there. And I say this with a background to a conversation that I had day before yesterday, that whether it's commodity related frauds, whether it's, some metal related cases in India that happened a decade ago, or the Chinese frauds, these things will happen. They were not the first, they're definitely not the last. I think the most important aspect is the transparency. Is there a trust deficit that is building between the financing institutions and the finance? And if that is the case, no matter how innovative you are, no matter how sophisticated solutions are, people will never benefit. I think the intention has to be absolutely spot on. Honesty is very important. Good old saying, if you're honest in your intentions, people will see through it and they will rely on it and you will get the money.
Shirish, just stay on the track and a quick answer. Then what about due diligence, distinguishing customers and segmentation? Where has that gone with the use of technology, with blockchain and AI? Don't you think the days are much better actually future, not just from an EDM perspective, but in absolute reality as well?
Absolutely. So technology has kind of brought down those barriers very efficiently. You do not need so many segments. And the bad news is you don't need so many people to look after those many segments.
Exactly.
But there'll be smarter ways of doing the same thing. I talked about deep tier financing, right? You talked about supply chain finance, only the MNC coverage banker will do it. But now what? We're looking at deep tier financing. We're merging 7 layers of the same ecosystem. You don't need 7 segments to look at it. You need one person who can look at end-to-end the ecosystem of the supply chain finance, and everybody gets financed. Everybody gets benefited.
Yeah, lovely. I'll come back to Nandkishore, and Shirish also alluded to it. Chandrakant alluded to it as awareness, right? How big is the issue of the lack of proper communication or awareness, right, of the products available in the market or the players available in the market? Do you see as yourself as an SAP and as well as a formal banker?
I would agree with you partially in the sense that this issue was definitely more severe, years ago, few years ago, many years ago, whatever. But not so much now, because even the tier 4, tier 3 cities have or smaller towns have access to the internet and the information. And as according to me, more and more second, third, or even the 4th generation youngsters are taking over the mantle from their parents and grandparents. Now these guys are more educated than their parents and grandparents. These guys are more, quick on the uptake, and they know what is happening around the world. So this factor will cease to be a showstopper probably in few years. It may be there now in bits and pieces, but not as severe as it used to be, according to me. But having said that, I don't think mere knowledge of information or information about the availability of products helps entirely. So it only results in education of the entrepreneurs. The real test lies in finding those products and getting funding from the banks or the financial institutions, NBFCs, or even the fintechs.
Okay.
So you know what? Reserve Bank of India, incidentally, I'll just take a minute more, has and this has been going on ever since even when I joined banking system in 1981. There's something called priority sector lending for banks, which they have to adhere to, and 40% of their net assets should be towards SMEs, MSMEs, agriculture, export promotion. And from my banking experience, when I was doing that, most of the banks always struggled to find those borrowers to meet those 40% limits. And we used to, in the last quarter, struggle to find some good borrowers, agriculturists, SMEs to lend to, so that we can, and it is on a date of balance sheet. So as on 31st March, we meet those, classified guidelines and then meet. So here is the dichotomy. The banks have to lend, the banks want to lend, but they don't find the right type of, couldn't find then right type of borrowers. With this digital explosion and with this fintechs coming in, I believe the banks and the fintechs, when they marry and they start doing it, probably this gap will be bridged, and we will not have so many banks struggling to find right borrowers to meet those guidelines, and will not have so many SMEs not getting proper finance. So according to me, we are reaching the end of that lack of information or the tunnel of no knowledge. We are reaching that, coming out of that tunnel.
Yeah. So can be a reason for not to have finance eventually. Anyway, quick question to you again, and a brief answer I need. What is better, fintech with banks or fintech versus banks? Quick answer.
I believe I briefly alluded to when I was answering your second or third question. I feel fintech with banks is the best for both. Benefits for banks is they can offer API based solutions. They can offer asset light models. For fintechs, they can access large blockchain. They can access large customer base of banks and also use their distribution muscle. So, and some of the banks, incidentally, or FIs have started promoting their own fintechs. They have started creating their own fintechs so that they can have a brilliant marriage, so they can keep the fintech out of their books as a subsidiary
Sure.
and use the fintech's ability, and then start using the benefits or the strengths of both, and go ahead with the supply chain finance, which according to me is one of the most secure finance. Only thing, as Shirish rightly pointed out, it was not we were funding only the top tier suppliers. We
Okay.
have to go down the tier, so it's a better model with
Yeah.
banks.
Yeah, so fintech means traditional versus technology, right? A lot of digital of sharing. I would like to move over to Shailesh and bring up a very critical issue. Is like Nandkishore alluded to it. Tier 1 cities, tier 2 cities, tier 3. Like, so how can SMEs in today's world use social media to increase their brand value and increase their outreach to a diverse customers demographic? Is it just having an online presence? Does it mean that, yeah, I have a media presence? Or is it something more than that, Shailesh?
It's much more. The Let me give you two or three big instances. Uh, Last month, we had a single agenda board meeting. No other matter was discussed except digitalization,
Yeah.
except direct to customer approaches. And there is no way that you can have a direct customer approach if you are not savvy on social media. If you do not have your own communication, your Insta page, your Facebook page, your website, you're partnering with whoever is a channel partner that you can use. You need to have software which enables you to figure out how to parse communications which are coming through multimedia. All of this is absolutely necessary infrastructure. And the good news is that this infrastructure is now available on a pay as you go basis to MSMEs. And Chandrakant bhai, this is something that you should please spread amongst the SME community, that this availability of being able to approach direct, and this is available now in every segment. You want to source uh, additive manufacturing, you'll have a whole host of possibilities to look at. You want to source technology which will enable you to robotize portions of your manufacturing which are very difficult to handle in terms of quality, you'll get your answers. You want to access customers, you want to access suppliers, you want to access people. For everything, you will get a solution on a pay as you go basis. So, social media is critical. There are all kinds of films and all kinds of fake news and fake things, and there's a whole lot of cybersecurity jungle and fear growing around us. But all of that is controllable, is manageable. Today, half day we spent virtually in a board meeting thinking about what to do to be the best in the world in cybersecurity. So,
Lovely.
but we want to be in
Yeah.
social media, and we value our online reputation, and we
Lovely.
value everything that is happening in the space that connects us.
Sure. Lovely. Shailesh, 2 points for me, direct to customers and pay as you go. Shirish, I'll come back to you later, stay on that. And I would like to use your influence on within Asia, the ecosystem part of it, based on what Shailesh said. Before that, I would like to just hop out to Chandrakantji and ask him, right, direct to customers, we talked about quality, we talked about fintech, right, technology. Chandrakantji, are our SMEs ready and fundamentally compliant to make use of all the emerging technologies and the knowledge, and how SME Chamber India, someone like us, can help them? Any thoughts?
See, particularly as Shailesh Bhai said about some things about, particularly for SME sector. See, usually SME sector India is not allocating the funds for branding, marketing, promotion, digitalization, or any particular, entering into market. They focus more on their own difficulties and, to, resolve their issues and problems, and focusing more on the manufacturing and other things. Now, the point is, this is the right time to SME sector, those involved in the manufacturing, those involved in the export business, and those involved in a large employment. they should focus more on branding, marketing, promotion, and mostly digitalization, because now without virtually presence you will not do any business, or you will not expand your reach. As Shailesh bhai said, it is a need of hour. When he has entered in business, that time email also not much be started.
Yeah.
Uh, so so
Very
that time we used to meet people, we used to meet customer, we present our invoice of physically, we present our challan physically. Now everything is now digital. We have to focus more digital. Another point, very interesting point, is that SME sector is not aware about particular various facilities. Even though Shailesh Bhai is involved in various factors, in particularly in aspect of the banking sector or financial, in India there are 7 crore, approximately 7 crore MSMEs. Hardly 45 lakh MSMEs are enjoying banking facility. In 45 lakhs, hardly 10,000 SMEs must be enjoying larger banking facility,
correct. It's
higher level.
70,000.
Yeah.
Okay. So because of that, when we are approaching banks, or banks is not approaching to SMEs, okay, there is a lack of communication, there is a lack of information, and there is a lack of awareness. So we are doing the same thing through SME Chamber of India. As Sanjay bhai asked me about what is the role of SME Chamber of India. We focus more on the financial model. We focus on the financial system. We focus on risk management. We focus on how SME can avail the facility available with the banks. Now my question to all the panelists, that, or rather you can give a message to SMEs. What is the importance of supply chain finance? What we discussed, that is the importance, but such a message we want to give, that importance of finance, particularly how MSME sector will survive in this competitive era. Currently we are facing a lot problem. Supply is not properly going on, the supply chain management disturbed, raw material is not easily available, skilled manpower is not easily available, exports order are standstill. Most of the large companies are not buying product. They said, we don't want to increase inventory, because they don't want to pay money for the inventory. So this situation, what is the message to MSME sector? Shailesh bhai, from you.
My message is come together. Stop thinking about competition. Think about co-opetition. Think about how we can kandhe se kandha laga ke, how can we become stronger. That would be my single most important message to all our MSMEs. We need to come together. Stop thinking of ownership. Start thinking about how can we beat the world, because we can. There is no place on earth which has the manpower, the resources, the capabilities, and all of that, which can actually take on what China showed us is possible. How did China start? It did just this. It sent its children to all parts of the world, got educated, took technology one way or the other, brought it in, manufactured at scale, built it out, and sold it to the world. And there's no reason. India and China, in 1700, India was number one, China was number two. And we lost that whole momentum over the last 3 centuries of not coming together and not working as a nation, not working to beat the world.
Lovely. Nandkishore ji, your message for today. 2-3 points.
Yeah, I 100% agree with Shailesh ji, because he said it very rightly. Extraordinary circumstances always call for extraordinary measures, and we are in absolutely extraordinary. It is unprecedented, and we pray to the God that it never happens again. And that has really created major problems. Forget SMEs, even the large corporates are suffering. I sympathize with SMEs, because I read a couple of newspaper items saying that some of the large corporates have already announced that instead of 30-day payments, we will extend it to 45-day, whatever may be the law, 45-day, we will extend it to 60 days, 75 days, because they say we don't have the liquidity. But if corporates, large corporates have this problem, what would poor SMEs would do, who always have, they have to eke out their living hand to, most of the times hand to mouth. We don't find cash-rich SMEs, barring some exceptions. So the SMEs who are, as Shirish was saying, SMEs who are supplying to Levers and Tata Motors and Leyland, they would be in a better position because they would get their bills discounted, they'll get their vendor bill discounting facilities, they'll get their buyer-led model, supply-led model. But the SMEs who are not so fortunate would always struggle. And that is where, hold on to your cash reserves. Those who have over-leveraged or leveraged will always have problems, because that is the problem. You cannot go, you will not have problems if you have not borrowed, because you can go on frugal lifestyle, but you have already borrowed, you have to service the interest cost, and you are not able to produce, you are not able to generate cash flows. How do we survive? These are things which are going to be extremely difficult. So come together, cooperate, don't compete, and probably sail through these difficult times somehow. It's not too far, maybe another 3 to 6 months, India will be back on its track. And with China getting affected, the sentiment in the world getting affected, or against China sentiment getting developed, I feel we have a great chance. Our SMEs, our manufacturing sectors have a great chance to step in where China would not be able to step in, or would not be allowed to step in. I think Sanjay has gone off the radar, or
I'll just continue. I think
Shirish.
Sanjay will just come online. I'll be very brief. I think I only say 3 things, and these are the messages to SMEs that we're talking about, right? The first one I will say is be open to the change. It's not going to be the same old way of operating. It's going to be a very different world. Second thing I will say is don't let this crisis be a wasted opportunity. This crisis is a problem. We all know that. But every crisis comes with opportunities. You can look back into the history, and I'm probably the youngest on the panel, but you can look back to history. Great success stories have come out after every single crisis, whether it was financial crisis, whether it was an epidemic like this. Great things, great stories have come out of that. Last thing I would say, please be honest and transparent. The trust is something that is extremely important for the system to back you up. Please be honest, please be transparent, and please have the right intent when you're seeking these kind of supports, because the market remembers, right? Things can come and go, market remembers. So one bad case can disturb the entire ecosystem. You're not just doing this service to yourselves, but to the entire community. So let's just try and sort of make as good as an outcome of this thing. Again, to repeat, be open to the change. Don't let this crisis go waste. Third, be honest and transparent.
Fantastic.
Hear me, Chandrakantji?
Yes.
Yep.
Okay, lovely. So my 3 points, and thanks a lot. I just jumped in between, unfortunately. So my 3 takeaways today. Number 1, think like a customer and add value, right? If you add value, there is always ground open for you. Number 2, do something today for tomorrow. So if you do something today in terms of technology, in terms of innovation, creativity, something for tomorrow, when you reach tomorrow, you actually walk the talk. If you don't do something for tomorrow, then when you go to tomorrow, you are behind the world, because the world has already moved away. So do something today for tomorrow always. And the third thing, which is networking, and networking. Do go cross-border, do network, increase your brand awareness. Chandrakantji, over to you.
Thank you, Sanjay. Thank you very much, and good message to the SME sector particularly. So we are now coming to the end of this discussion, and I hope that this good discussion is very, very useful to SME sector particularly. But we are not going to stop here, or we are not going to end our discussion, but this is the start of the discussion, I think so. And those SMEs are really looking for support. Those are looking for particularly enhance their business activity, and those are looking for developing their new market, or entering into emerging market. SME Chamber of India will be happy to support you. Rather, I suggest Shailesh Bhaiji, particularly the SME sector, since you're heading the Tata, the finance company, and L&T Finance, and particularly you are looking for support for SME sector also. I suggest, can we think about sharing the information amongst the SME sector and stakeholders, financially NBFCs, that this is the time now to support SMEs because banks are already come ahead. NBFC is also trying. Why don't you share your thoughts amongst the NBFCs, the leading NBFCs, where we can connect with the SMEs, needy SMEs, growing SMEs, where we can infuse the financial fuel. Because I focus more on entrepreneurship, employment, energy. In energy, electricity, financial fuel, labor also, manpower also, exports, and importantly, ease of doing business. Okay. So these 5 E's we are focusing more by SME Chamber of India, where you can play very important role. And I hope that this message should be given to all the financial institutions, particularly for the how to support SMEs, because Honorable Prime Minister is focusing more on SME sector, and he wants to empower SMEs not only to compete with the China but world market. So you want to say something?
I fully agree and endorse your views. Fully agree. Fully agree.
Thank you. Thank you. Lastly, I would like to say thank you to Sanjay Desai ji for taking lead for organizing this webinar and sharing your thoughts. Special thanks to Shirish Garg ji and Nandkishore ji is always with us. And I hope that let us give value addition information and knowledge to SME sector. Because this is the
Anything you
right
need
time
from me,
to
I'm there for
support.
you.
Yes. This is the right time to support and empower and strengthen their skill and scale. Then only we can achieve the $5 trillion dollars economy.
Yes.
If we have to make
Yes.
India as a manufacturing hub of the world, and if we have to compete with the China and other countries, we have to support SMEs. And I suggest all the SMEs, there are a lot of facilities, a lot of avenues are available for you. Only thing is that understand, avail, and go forward. Thank you very much for
Absolutely. Absolutely.
sharing
Thank
the
you.
thoughts at this very important. And I suggest all the participants and all the listeners can send their queries and some issues and suggestions, particularly for the supply chain finance and factoring. Thank you very much.
Thank you.
Thank you.
All the best.
Thank you very much. Thanks, Akan.
See you
Very
soon.
well done.
Thanks,
Thank you.
everyone. Bye-bye.
Thank you.
Thank you.